Good afternoon and welcome to Biztech's Asian Midday Market Watch. Our guest today is Halley, Senior Market Analyst, Asia Pacific at OANDA. Jeff, as always, great to have you on the show.
Yeah, great to be here. We might get some sound effects again because the monsoon's just starting as we started rolling the camera.
Oh, really? Well, the thing is, I'm in Malaysia. We've had some tough times. We've had flooding in parts of the country where we've not traditionally had a lot of. So it's tough going, and a lot of people are really hurting out there.
Yeah, and when you look at the Philippines as well, it's been a real tragedy there again as well.
Absolutely. Let's take a look at how markets in the region are performing. We'll start with the crypto market, where Bitcoin is at 48,609.1. It's up 4.11%. Ethereum is at 4,031. It's up 2.65%. Looking across to regional stock markets, we start with the SGX, which is at 3,087.98. It's up 0.49%. The KLSC is at 1,493.48. It's bucking the trend across the region, down 0.03%. Shanghai is at 3,609.49. It's up 0.44%. The ASX All Ordinaries is at 7,663.5. It's up 0.81%. The Nikkei is at 28,506.5. It's up sharply 2.03%. The Hang Seng is at 22,886.87. It's up 0.62%. Rounding up the numbers, we've got the Kospi, which is at 2,983. It's up 0.67%. So Jeff, tell me, what are the reasons for now this little bit of a bounce back and a sea of green across regional markets?
Yeah, Brian, I think the main driver has been that we've seen a rally in S&P, NASDAQ and Dow Jones futures this morning in Asian trade, and that has lifted various Asian markets, particularly those with a lot of fast money, FOMO, beta to movements in the US markets, notably, of course, the Nikkei 225, which is up over 2% today. So the mentality that runs around in that market, very similar these days to the NASDAQ. There's no particular reason they've rallied. I believe we've just seen a very harsh couple of down days on US markets, and what we're seeing is some short covering occurring in Asia. Now, Asia led that move down yesterday after the weekend news events, so there is some logic to it rallying somewhat today. But the move itself just looks corrective for me. It's a short-term sentiment swing, those sorts of swings that have dominated December. So I'd take it with a huge grain of salt. We're only one Omicron headline away from being business as usual.
Now, Jeff, your commentary every day is very, very interesting. And if for our audience who wants to read his commentary, is on Biztech's website every day. But Jeff, your commentary is just up. What are some key points that you've highlighted today that investors should be looking out for?
I think the main one I'm trying to get across to everybody is that we're running into the year-end period now. Liquidity is falling. There's very little data out. There's a few bits of data on Thursday from the US, but otherwise the calendar's dull. So markets are being driven by sentiment swings. Now, that's being dominated by Omicron and the US Build Back Better failure, which has led to this negativity in markets. But overall, what we're seeing is very, very choppy range trading. This is not a market in December for directional moves, bottom fishing, top picking, whatever you want to call it. This is a move of volatility and range trading. And so it's important that your viewers, if they are investors, don't get caught up in the intraday noise, because that noise is going to get louder and choppier as liquidity dries up into the end of this week and through next week.
And how about your view on oil markets, Jeff?
Yeah, I can see oil's been under pressure, and yesterday we had another mini capitulation intraday where both contracts, WTI and Brent, dropped over $3 before they recovered to finish only slightly down. I think for your viewers, you can't discount OPEC Plus. Now, OPEC Plus deliberately left their December meeting open so that they could reconvene immediately and make adjustments to their production forecasts or their production targets should oil markets move too far to the downside. Now, I believe if we approach $65 a barrel in Brent crude again, which is where the November Omicron sell-off bottomed out,
Yeah.
there's a very high chance we're going to see OPEC come back in and surprise the markets. Also, OPEC compliance at the moment is running at about 115%, which means they can't even pump the oil that they've promised to pump. So any effects that OPEC would make regarding their rolling back production cuts are likely to have a very outsized upside impact on oil. So I'd be very careful about getting too negative on oil at these levels.
Now, Jeff, as always, thank you very much for taking your time to come on the show.
Always a pleasure, mate.
Now, we've been speaking to Jeffrey Halley, Senior Market Analyst, Asia Pacific at OANDA, on Biztech's Asian Midday Market Watch. I'm Brian Fernandez. This video will be on our various social media platforms as well as our website, www.biztech.asia. Please like and subscribe to our various platforms. Thank you very much for tuning in.